Hello and welcome to Critical Line Item. In fact, this is the first video version of the podcast, and it'll be known on YouTube as Ravlic at Large. My name is Tom Ravlic, and thank you for joining me for this particular episode. One of the things that people won't necessarily be aware of is a lot of the work the government's doing in buttressing its policy decisions with data, with evidence. And that's one of the most important things that politicians and others need to do, is justify what exactly they do in government and why certain policy decisions matter. Now, my guest today, the Assistant Minister responsible for the area, Andrew Leigh, who's an absolute guru on economics, but he's also a stickler for getting the right answers related to trials and getting evidence for policy, also multinational taxation, and if we get time, depending on how we go, also look at some of the fundamental economic issues people are going to think about as we get closer to the election. Andrew, thank you for joining me.
Real pleasure, Tom. Thanks for having me on.
Absolute pleasure. Now, when sometimes people look at policy making in government and wonder where it comes from. You're in a unique position to talk about how you gather evidence to support decisions about programs, where money is allocated, and where money is withdrawn from or programs are stopped. How do you do all of that?
Well, Tom, I'm wearing my I Love Evidence badge because I knew we'd be talking about this topic today, and was keen to display my enthusiasm for good quality evidence. Really what we're doing in government is taking a leaf out of the medical book. Medicine, about 75 years ago, moved towards a system of eminence-based medicine, where the greybeards had their way, to evidence-based medicine, where you used rigorous approaches such as randomised trials to test whether treatments worked. Sometimes that confirmed conventional wisdom, sometimes it upended it. You had a whole series of treatments in medicine over the years that seemed good in the laboratory but didn't work in the field. So too in policy. Our Australian Centre for Evaluation has been established because we want to get better evidence for what works and what doesn't, partly to get better value for money for taxpayers, but also to make sure that government is doing its utmost to assist those who really need government to be effective. We have oodles of examples of programs that seemed like they might be effective, but when they were subject to a rigorous evaluation, didn't work out. The UK Social Workers in Schools program, beloved by social workers, beloved by schools, turned out not to improve the mental well-being of British teens. And so they pivoted and moved to other approaches to tackle that important problem. The Drug Court in New South Wales, established in 1999, was shown in a randomised trial to be very effective in reducing offending, not only benefiting those who were being sentenced, but also the community at large through reduced offending. More evidence is really just common sense. We're trying to do a lot more of it in government.
What are the immediate examples that come to mind when you think about the use of the randomised trials?
We've got some randomised trials kicking off now in the Department of Employment, looking at employment services and where we might offer better employment services to people who are in the online caseload. For example, offering a career coach, again, voluntary, so you don't have to take it up if you don't want to, but a random group of job seekers would be offered career coaching, others wouldn't, and we compare the outcomes. Career coaches are more expensive than the traditional way in which we've done things, so we need to see whether it's good value for money for Australian taxpayers. In a whole host of other areas across government, we're collaborating with agencies to see whether we can set up rigorous evaluations, get better evidence in government about what works and what doesn't.
Is that where you've got this sort of interesting nexus between a policy position that might be ideologically driven, for example, in terms of social justice, and doing the right thing. But when you test something, you actually work out whether what was deemed to be the right thing rhetorically actually works or not.
It's a really nice way of putting it, Tom. As a social democrat, I think we should hold very strongly to our values, to creating a more egalitarian, inclusive society. But we should hold particular policies more lightly, be aware that sometimes things that seem good don't turn out to be effective. I basically have one view in social policy, which is that we should evaluate things rigorously. I'm not an adherent to particular programs until they've been proven to work. And that's the approach that good medicos take. Their commitment is to making people healthier, but they don't go through their careers as a particular adherent of a certain chemical unless it's been rigorously proven to improve well-being.
What are some of the examples of this type of work from overseas that have piqued your interest? Because, as you say, you're into evidence and you're also a researcher in your own right. What are some of the interesting policy testing that you've read about and heard about from overseas jurisdictions?
Yeah, one classic is Scared Straight, a program which took delinquent youths and put them behind bars for a day. Low-quality evaluations suggested that it reduced offending, but when they did a randomised trial, it turned out to increase offending, which is a reminder that government programs can not only be ineffective, but sometimes can actually be counterproductive. Conversely, cognitive behavioural therapy has been shown in randomised trials to be very effective for that same delinquent youth population. So it's about working out rigorously how to test programs rather than saying, well, it sounds good in theory, so let's roll it out right across the population.
How does that sit, the approach of trialling that we've spoken about up to this point, how does it sit with other work the government does to assess the merits of policy? For example, you've got your stock standard consultations that departments might do with stakeholder groups. Yeah. Are there any examples you can think of where the approach that you're looking at in terms of randomised trials also sits neatly next to the more traditional or the department-led consultation processes with stakeholders?
Yeah, no, you make an interesting point about the interaction between the ways in which government engages. One of the things that's important to know about our approach to randomised trials is they're always done within a careful ethical framework. We want to make sure that people have options to opt out in most cases, and that we're not being overly burdensome. But it's also important to remember that a program that is harming people, such as the old version of Scared Straight, is itself an ethical problem. So we engage with stakeholders as we look at shaping up the evaluation agenda, and also recognise that if you explain clearly to people why you're doing evidence-based policy, then they're more likely to come on board. I think back to some of the early randomised trials of AIDS treatments back in the period where AIDS really was a death sentence. In some of those trials, it wasn't explained to patients why they were being put into a clinical trial. And so patients reputedly switched the vials halfway through. And so everyone in the trial got half a dose of the treatment drug, half the dose of the control drug. That, of course, meant that everyone got a half dose and the trial was rendered completely useless. What they should have done was to engage with those patients and say, look, the reason we're doing this trial is in order to find out what works. And we can't scale up a rollout of AIDS medication without knowing that information. So you've got to bring people along on the evidence journey.
One of the other areas that you're responsible for is looking after multinational taxation. You've been fairly busy, haven't you, with a whole raft of legislation that's gone through related to the Pillar 2 proposals from the OECD and a range of other things. Are you able to recap the year of legislative activity that you've had over the past little while? Because there's been a fair bit you've done.
It has been a lot, Tom, and it's been something that we worked on a lot in opposition and hit the ground running when we came into government. Basically, when multinationals are trying to reduce their tax bill in Australia, they're doing that by trying to increase their deductions. And one of the tricks they've been using to increase deductions that was loading a lot of debt onto the Australian arm of the multinational, and so it had big interest payments to deduct from the tax bill. These internal loans were getting out of control, and we passed legislation that curtails the use of debt deductions as a way of reducing multinationals' tax bills. We've also been among the first set of countries to implement the global floor on company tax. That matters for all countries, but particularly for Australia, whose 30% corporate tax rate is a higher rate than you see in some other jurisdictions. So the race to the bottom really imperiled Australia, and we set about implementing the Pillar 2 of the OECD's two-pillar agreement quickly in order to make sure that Australia could, in certain cases where other countries weren't imposing the global minimum rate, impose top-up taxes. And then we've got transparency measures. So if you're a listed company, you have to disclose your country of tax domicile. If you're tendering for a big government tender, you've got to say where your company is headquartered. Now in legislation that just passed through Parliament recently, you will have large multinationals will have to disclose on a country-by-country basis the amount of tax paid in various jurisdictions.
One of the things that has been prominent in the public eye over the past almost 2 years now is the issue of how advisors interact with the tax regime. Do the changes, in your view, create a different kind of environment for the beast that is a tax advisor in terms of dealing with their clients, but maybe multinationals?
Yeah, I mean, we certainly recognise that a large, complex corporation will need professional advice, but the PwC scandal did highlight some problems with the way in which certain advisors operated. The use of confidential information garnered through a confidential consultation process by PwC then saw that company offer products towards its multinational clients that was seeking to circumvent the government's legislation. We were shocked by that, and that led to a range of changes, and you've seen the fallout for PwC itself. It is really important that we get thoughtful advice from those experts, but it's important too that those experts understand that part of providing an opportunity to see draft legislation, comment on draft legislation, is that there's a clear firewall from using that information to benefit their clients.
If we look at the change in law, and we talk about in the area of accounting ethics and the discussion about ethical conduct more generally, there is a discourse that focuses on the way in which people behave when there's no guardrails. And then when the law is imposed, that it causes people to constrain their behaviour or limit any sort of excesses of their imagination, shall we say. Does it concern you that the government has had to put more legislation in place in order to encourage people to be less adventurous?
Yeah, I think it's an inevitable result of the PwC scandal. And of course, that work has been led by Treasurer Jim Chalmers and the Assistant Treasurer Stephen Jones, working really to make sure that our system is as robust as possible and to reflect the strong community concern over that scandal.
One of the interesting things about the multinational space that you've inhabited is that this isn't the end of the story, is it? There's a lot more work to be done. Where do you go now once you've sorted out the Pillar 2, the transparency measures, and also the shutting the gate on mucking about with the intercompany loans?
Yeah, the natural spot then is to look at Pillar 1, and Pillar 1 is the allocation of taxing rights among very large multinationals. So Pillar 2, that global minimum tax floor, applies basically to billion-dollar firms. Pillar 1 is for firms with turnover above $20 billion a year. So the largest of the large. And that allocates taxing rights across jurisdictions. So Australia's committed to implementing that, working with other countries about how the best way of making that happen.
How do you get that to work well? Because tax is a universal matter, but every country has its own kind of dialect when it comes to legislation. Each country comes from a different place. How do you make that work?
Yeah, it's a really good point, Tom, and I love your analogy with languages and dialects. It is an ongoing big piece of public policy. Treasury is engaged with counterpart agencies right across the OECD and that broader group of around 130 countries. So Australia's on board for getting it done, but the implementation of Pillar 1 is trickier than the implementation of Pillar 2.
Talking about tax and Pillar 1 and other things, there's a lot of jargon involved in taxation and economic talk generally. Of course, you've got a book out called The Shortest History of Economics. Anyone that wants to have a look at it, go out and see it. I've read a part of it. I still need to finish it, and it's certainly a very good primer for economic enthusiasts or people who want to learn more. Andrew, how do we explain some of the fundamentals of, say, government budget management to people who are going to be thrust into a discourse as we get closer to the election? I mean, for example, how do we explain to people the concept of something being off budget outside the GGS, which to you and I is something we would understand, but for someone out there in Bankstown or Brunswick or up in Brisbane that doesn't deal with it every day, it can be alienating when they confront that language. What does it mean?
Yeah, I mean, I think whether you're in Bellevue Hill or Blacktown, there's many more interesting things going on in the lives of the typical Australian than multinational tax. Now, our obligation is to speak clearly about what we're doing without diving so deeply into the details that people's eyes glaze over. Holding multinationals to account is an important goal for the government. And we're doing this, Tom, not only to raise revenue, but also to get a level playing field. So a tech startup in a garage in Perth is not going to be immediately hiring accountants to figure out how to divert its profits off to a tax haven. So if it's competing, it shouldn't be competing with one hand tied behind its back. Multinational tax fairness isn't just about revenue, it's also about a level playing field for small businesses going up against larger firms.
More broadly, as we get into election mode, there will be a lot of economic terms thrown around that people won't necessarily understand. How do we explain? How should people sort of think about a term like cost of living. What is meant by cost of living?
I think that's just going to the challenges of inflation and how people are feeling that the prices are going up. Really, the increase in prices is most challenging when you've got it outpacing your wages. That was the situation when we came to office, where real wages were falling. We've now seen successive quarters of real wage growth, which is important. So after taking account of the change in prices, people's pay packets are going up. And that'll be a clear message we'll take to the election, that the cost of living reforms we've put in place have provided relief, whether that's through the increases on Commonwealth rental assistance, improving childcare, the changes we've made in providing HECS relief, and as well as that, turning around to budget surpluses, which give the Reserve Bank the freedom that it needs in order to make its own independent decisions on interest rates.
How do you explain to people, to a layperson, if we play a game for a moment and imagine I'm a bear with a little brain, how do you explain to a layperson the difference between what the Reserve Bank does and what the government does when it comes to managing the budget to achieve a better fiscal policy outcome?
Well, the big job of the Reserve Bank is to smooth the business cycle, to make sure that the ups and downs of the economy aren't as large as they would otherwise be. And it does that through changing interest rates, which are essentially the price of borrowing and therefore the price of bringing consumption forward into the present. That has an impact through businesses, but also through households. In Australia, the household channel is bigger because we have more of us on variable rate mortgages. If you look at a country like the United States, the impact is largely coming through corporate borrowings. At the same time, the government has a responsibility to make sure that it's working in collaboration with the central bank. The surpluses we've brought down, the cost of living relief, all have made a tangible difference to reducing inflation. Despite being opposed by the Liberal National parties when we brought them to the Parliament.
Now, you've been really generous with your time today, Andrew. If people want to know more about the things you're doing and the speeches you're delivering, where can they go?
Well, my website's the modestly named andrewleigh.com. People are welcome to sign up for the monthly email that we send out. It goes out just once a month and keeps up to date with what we're up to. I'm on the major social media platforms. I've got a couple of podcasts, one on speeches and conversations, another one on ethics and values called The Good Life. And then I try and get out there into the community as frequently as I can through street corner meetings, town hall meetings and the like. And on top of that, also am trying to write opinion pieces and be out there in the media when you can. It's a much more fragmented media landscape, Tom, even than when I entered Parliament 14 years ago in 2010. So reaching as many people as possible is challenging, but it's also one of the pleasures of this job. To speak to people, to gather their ideas and to shape better policy as a result.
I guess I've mentioned the shortest history of economics earlier. How did you find time in the middle of all the work you've just enunciated to write the book?
Well, the shortest history of economics was largely written in the tail end of the pandemic. A product of frustration over lockdowns and being in opposition. In government, I've focused more on writing laws than writing books, and in being part of that reform journey. And I was really proud to see so much of our legislative agenda passing through the Parliament just at the start of the month. really makes a difference for Australians to have that updated merger regime, to have the food and grocery code getting a fair deal for farmers, to have build to rent and help to buy kicking off. These are big reforms, and it's really pleasing to me as somebody who got into politics in order to make a difference on good economic policy, seeing these things become a reality.
Is there much downtime for you over the Christmas break before you head into what will be an election season?
Spend a little bit of time with the family. My folks are in Sydney, so we'll spend time there, throw the kids in the pool, get a good chance to do some hot Sydney runs, and then hit the ground running for 2025, which will be a hotly contested election. My personal view is that Peter Dutton is way too much of a risk for the economy, and we'll be making the case that we have done a lot, we have a lot more to do, and you can't risk Dutton.
Andrew, thank you so much for joining me for this particular segment.
Real pleasure, Tom. Thanks to you, and thanks for all you do.
Okay. I've been talking to Andrew Leigh, the Assistant Minister in the Albanese government, looking at a whole range of issues from international taxation, randomised trials, and also the broader economy. Thanks for joining me, and we'll have another episode of Ravlic at Large, a production of Critical Line Item Productions, coming to you soon. Hello, welcome to Ravlic at Large. My name's Tom Ravlic. Thank you for joining me for this latest episode. Many of you will have heard about climate-related reporting or climate financial disclosures. These are new things some companies are going to have to provide to the marketplace in their reporting packages in order to tell people what risks they have in relation to climate and also how they quantify those risks. Well, what are the costs involved? One of the elements in this is the reporting, and that is being dealt with by the Australian Accounting Standards Board through standards that have already been issued and regulated by the Australian Securities and Investments Commission. There's another side to this as well, which is the actual audit, and the data will be looked at by people in the company and prepared by people in the company. Then assurance providers need to look at it and work out whether what the company has done makes sense within whatever framework it is applied. The body in Australia that deals with the guidance is the Auditing and Assurance Standards Board. Its chairman, Doug Niven, joins me to explain what the board is doing and where the board is at in developing audit guidance, as well as when people can expect certain kinds of reports to land. Doug, thank you for joining me.
Thank you for inviting me, Tom.
Absolute pleasure. Now, before we go into an interesting sort of table that tells people when the types of audit or assurance reports are going to be published and the level of credibility we can associate with them, the foundational question is probably important. What is the audit board's role in this process in getting the Australian marketplace to reporting the climate financial disclosure regime as specified in the standards?
And thanks for that question, Tom, because the Auditing Assurance Standards Board has a key role in this. There's been demand from investors and others for assurance around climate-related financial information, and ultimately it may expand out to other sustainability information. At the moment, it's a climate-first approach in the legislation, the Corporations Act, but you can have voluntary reporting and assurance around nature and human capital and so forth. As far as the Corporations Act is concerned, the reporting regime commences with the largest entities from years commencing the 1st of January 2025. Now, where the Auditing Assurance Standards Board comes into this is, I guess, three main parts. First off, we've been asked through the legislation, but we would be doing this anyway, to develop and adopt standards for auditors. And by the way, for the Corporations Act, it's the auditor of the financial report who is the one who signs off on the sustainability information. There could be others for voluntary assurance. But in that context, to develop standards around what's called reasonable assurance and limited assurance. And in that regard, we're looking to adopt an international standard fairly shortly. But the second part is there's a legislative framework here, and it gives you sort of a starting point and an end point for companies that are reporting or entities that are reporting under the Corporations Act. So it tells you the end point is for financial years commencing 1st of July 2030 onwards. It's reasonable assurance over all those disclosures you mentioned that are in the AASB standard, S2 on climate. But the AUSB is a body that's charged with figuring out the phasing in of assurance over the years leading through to 2030. Yeah, what should be subject to assurance when, whether it's limited assurance, whether it's reasonable assurance. So that's the second component. And then the third component is that international standard I mentioned. It's an international baseline, but it's, well, both practitioner neutral, but also reporting framework neutral. So we have a role in supplementing those standards that auditors and other assurance practitioners would be adopting with guidance in the form of frequently asked questions and so forth, but also developing an education program as well. So they're the three main components. Yeah, the core assurance standard, the phasing in of assurance over time, and guidance and education to assist practitioners and others, bearing in mind that there's a lot of work to be done in a short space of time. This is a new area for many companies, auditors, other practitioners, and we have a key role to play in supporting that process and assisting with people being able to get up to speed and understand the requirements and so forth.
There is something you mentioned in the answer you've just given, which is fairly comprehensive, that may be worthwhile fleshing out for people. Most people wouldn't know that there are three levels of assurance: a reasonable, limited, and bugger all assurance. That is no assurance at all. What is the difference between reasonable and limited assurance for those people to whom those two words or two phrases are complete and absolute jargon?
It's a really great question, and I'll preface my comments by saying auditors of financial reports and so forth have experience in this area, and they're familiar with the standards we've already issued for audits and reviews of financial reports. So audits involve reasonable assurance, and what's called reviews, which may apply to half-year financial reports, are limited assurance. Now, reasonable assurance, and there is an objective, a definition around this. The auditor obtains reasonable assurance that the financial report as a whole is not materially misstated, or in this case, the sustainability report with the climate information as a whole is not materially misstated. Now, reasonable assurance is a higher level of assurance than limited assurance. It's a positive sign-off. It's not absolute assurance. So it does involve things like sampling and so forth, but it's a high level of confidence around the financial report, whereas limited assurance is it's actually a broader range of assurance than reasonable. There's a substantial body of standards, guidance, and practice around reasonable assurance. Limited assurance can be to be honest, anything from just below reasonable assurance going down to, essentially close to what you said before, no assurance. But it's still a level of assurance where the practitioner is giving a conclusion as to whether there are reasons to believe that the information, whether it's a financial report, sustainability information, is materially misstated. And so the key is reasonable assurance is a positive opinion and limited assurance is a negative opinion. So it involves work such as inquiries of management, analytical procedures, and so forth. So there's a bit of jargon in there as well, Tom, but hopefully that will give an idea. And by the way, that standard I was talking about on sustainability information goes through, and it's got comparative tables, what would be required in each phase of an engagement from planning through to concluding a reporting under limited and reasonable assurance. But I do understand that it's a new concept for many, and we need to explain it better because it's actually the case, by the way, a key part of this is preparedness of companies. And if the systems and processes aren't great, even under limited assurance, an auditor may need to do more work, and that can start to approach the work for reasonable assurance.
So let's just recap for those people that are out there and watching this, perhaps out of their own curiosity. What Doug and I have just outlined is that there are 3 levels of assurance. You've got the top tier, which is reasonable assurance. There is a positive opinion associated with that. Limited assurance, which you will typically find in things you've called reviews, which will be a kind of a negative assurance statement. Nothing has come to my attention that somebody's cocked something up. And then there's no assurance at all, which is simply what accountants would know as agreed upon procedures or things people agree with a client that they will look at and just reassess. It doesn't require them to apply auditing standards necessarily. It's just recalculation or redoing something and then telling the client what they found when they've redone it in effect. Having done that, Doug, it's kind of a complicated picture you've given me to share, and let's do that now because it is instructive. What are we looking at here?
Okay, and at first glance, it looks very complicated. I'll give you that, but we've tried to, in a diagrammatic sense, in a table, try and depict the phasing in assurance that our board has agreed on the 16th of December, would apply to mandatory assurance over mandatory climate information under the Corporations Act. And so I'll try and step through the table, but I do agree for people who see the table the first time, it's a bit mind-blowing. And so, as you mentioned, Tom, from a reporting perspective, there are 3 groups of entities, so it's phased in reporting. So for the largest entities, Group 1, the reporting commences, and I'm looking at the top of the diagram here, Group 1, Year 1, the reporting commences for years, commencing 1st of January 25, then for Group 2, as you go down, it's 18 months later, years commencing July 26, and then for Group 3, another year after that, 1st of July 27. So that's sort of broadly when the reporting starts. Then what we've been asked to do is create a phasing model, and we've decided, well, it makes sense to have consistent phasing in across all 3 of those groups. So the very top part of the table is simply saying for each group, the phasing in starts for a different year,
okay,
but it comes in, on a consistent basis over time. So the bottom part of the table is showing in that very left-hand column broadly what the disclosure requirements are under the AASB standard on climate, S2. And then for each of the reporting periods that follows on from that, what we'll be requiring in terms of no assurance, limited assurance, or reasonable assurance for those categories of disclosure. So that's explaining how broadly the table works, but I should pause there, Tom.
Now, if people look at the second half of the table where we have blue coloured cells of the United Nations, almost the United Nations baby blue coloured cells, we don't get to reasonable assurance until 2029 to 2030. Is that because everybody's learning at the same time and expecting people to report at the top tier level is possibly inappropriate?
Yeah. So you've essentially covered it. We did extensive outreach and consultation. We wanted to understand perspectives of investors, users, obviously the auditors and their experts, and the companies themselves in terms of their preparedness for having assurance. Obviously, the reporting's there. They've got to report in accordance with the standards from the AASB, but it is recognising that in a short space of time, there's a big uplift in terms of resources, capability, expertise, and that people are learning. This is often the first time they've had this type of reporting, and so not inconsistent with the approach taken by others such as ASIC, giving people a little bit of space, and also it's trying to deal to some extent with cost considerations, although with the caveat I made before about limited versus reasonable. And so you're right. The idea is to give people a bit more space before reasonable assurance kicks in. And it is different dates. It's year 4 for each of the groups. It can be years commencing 1st July 28, which is, of course, 30 June 29, year ends for June, year-end companies. But if you have a look at those orange boxes up the top there, that shows you which year reasonable assurance is mandated under legislation anyway. So yes, you're right. It's trying to give people a bit more space to build capability, expertise, and their resources. And the feedback we had was somewhat varied in this area because it is a new area. Some of the larger firms would say, look, we'll be there with the assurance, whatever's required, whenever. Others were saying they needed more time. And so, you try to balance things up as best as you can. I should say this will be subject to ongoing monitoring as well to make sure that it's working, that there aren't any unforeseen problems, and so forth.
This is a challenge, isn't it? Because you will have the larger practices that have the resources who will be able to say they can do anything. They've also got the resources to buy talent in if they have to make sure that they're able to do anything by the specified deadline. You've got smaller, but still relatively large, but smaller accounting firms that will have clients impacted by the climate disclosure regime, but they will also have the challenge of competing for talent out there, depending on who they're auditing or reviewing at any point in time. Is that part of the consideration for the way in which the board and the government's approached it?
Oh, absolutely. And it's also reflected in the staggering of the reporting for the groups, because you can imagine more of the largest, the Group 1 entities, will be audited by the larger audit firms, and you'll have more of the small audit firms as you move down those groups, group in size, I mean. And so that's reflected in the start dates and reporting periods, yes, but also it's reflected in that staggering of no assurance, limited assurance through to reasonable assurance, and it was quite deliberate. To enable people to build that capacity. Now, for the smaller firms, I should say as well, and even for the larger firms, not all of the expertise needs to be in-house. It is possible to, and quite appropriate, that there would be actually more use of external experts and internal experts than there would necessarily be for the financial report, given the nature of the subject here. You need greater understanding of the business, geographies in which it operates, the regulations. And so it's quite possible that smaller firms will seek external experts rather than necessarily have them in-house. Obviously, they need to ensure the quality of the work that's performed by the external experts and take overall responsibility for their opinions and conclusions. But, that's a consideration as well.
Now, you've just mentioned something that is really interesting, is often poorly understood by people who are looking at the auditing fraternity out there. What Doug has just indicated is that a smaller firm may need to use an external expert, but there is an obligation under the auditing framework, isn't there, Doug? I think it's 620 for the audit engagement partner to be satisfied that the expert is appropriately qualified and that they're able to rely on the work of the expert. And so this new auditing standard dealing with sustainability assurance provision, it needs to be looked at in concert with ASA 620 that talks about the use of an auditor's expert, right?
Yeah, it's consistent. So you're right. What's actually happened is, from a financial reporting context, there's a suite of standards, including 620, as you mentioned. There's also, on the sustainability side, this new standard. It's quite a large standard in terms of volume, which covers the similar sorts of areas called it's internationally ISSA 5000. Australia will be ASSA 5000. And it will also cover this question about the use of experts, making sure they're perfectly qualified, competent, have the experience. And it goes beyond that, because when you use an external expert, it's about reviewing their work, making sure that the inputs that they used have been perfectly assured, all of those sorts of elements as well. So it's not just, I found an expert and everything's okay.
So there's a process that people need to be conscious of when they're reading the material that that the audit firm has put into an audit report, that there are many elements that go into doing this work. It's not just a case of an audit engagement partner knowing everything.
True. The audit engagement partner has responsibility, and look, they will need an uplift in skills potentially as well, because they need enough information to, first off, be able to select experts, review their work, but also in terms of the engagement. They'll need enhanced understanding of the business, as I mentioned before. So, overall, they're responsible, but they don't do all of the work themselves. And it just isn't feasible, particularly for the larger end of the market.
Now, we've spoken about the standard. We've looked at the magical table with all of the deadlines and the points at which the different audit reporting elements kick in, whether it's limited or reasonable assurance people are looking at. What else is the board going to be doing in relation to this guidance? Because none of this is easy, certainly not for the small to medium practices that may be engaging with the literature, is it?
No, look, that's absolutely true. And so we've been working on getting the standards out and so forth, but and that will be finished shortly. But at the same time, we've been very mindful, it goes to this third element, as we mentioned before, about guidance and education. And that's very important, particularly when it's a new area. People are coming to terms with, they've got a lot of questions as well, potentially. Larger firms have the resources here and internationally to develop their internal guidance, but that's not the case for the whole market. And so we clearly have a role in supporting, and it does to some extent go to supporting the larger firms as well. Firstly, dealing with some difficult questions that aren't answered in the international standard because they pertain to issues that arise under the local reporting framework. Bearing in mind that while ideally we'd have one reporting framework globally, and for financial reporting, a lot of work has been done across many countries to adopt similar standards, the same standards, but that's not quite the case with sustainability at the moment. And so there is a big challenge here in terms of the guidance. There aren't reports yet under these standards that someone can look at and see what's done, and the same goes for assurance. So we'll be developing frequently asked questions to deal with some of the more complex and unusual questions in a reporting framework. We'll be developing implementation guidance. Now, let me pause there and say we're not doing this alone. There's an International Auditing Assurance Standards Board, which will be releasing implementation guidance in January. And they'll be providing more guidance over time. It's not a sort of a set and forget approach for standard setters here or globally. We're obviously working with other national standard setters, or to be honest, Australia is ahead of most jurisdictions in terms of the reporting, introduction, and the assurance. But in addition to that sort of implementation guidance, frequently asked questions, we have a role in education as well. And so we are talking to others, the Australian Accounting Standards Board, ASIC, the regulator, accounting bodies, AICD, about how we can work together, well, firstly to make sure we're consistent, but also to make the best use of the limited resources that we all have and provide the best support possible. And we've got different things to offer. We might offer some of the material. The accounting bodies have the membership bases. And so it all will come together, but there's a lot of work to be done in a short space of time.
Now, Doug, we've covered a lot of material in the past 26 minutes or so. There are resources online that people can access on the board website. So can you tell people where they can go to get that material?
Yeah, so some of the material's there already. A lot of it's to do with the development of the standards. There will be more material, but our website, keep watching it because there'll be more material over time, more frequently asked questions answered and so forth, is auasb.gov.au. And obviously, you've got the AASB's website, aasb.gov.au on the reporting side. And others, ASIC's got material up there as well, asic.gov.au, and the accounting bodies are working away as well. So, look, there's going to be plenty of help. It's all happened in a short space of time because the legislation was only passed a handful of months ago. We got the reporting standards. We're almost there with the assurance standards. But certainly, recognising while the first reporting is by the larger companies, 1st of January 25 years, it's going to come very quickly for others. And you do need to plan in advance, and we need to provide the support. So we're going to be doing a lot of work in early 25, I can assure you.
Those websites again, for those of you who are playing at home, auasb.gov.au is the audit board website. You will also see copies of the board agendas, board papers that are made public, and the highlights, documents and minutes when they're released. So you can understand the basis of decision making. AASB.gov.au is the Accounting Standards Board website. It also has comparable documents. It issues an action alert after its meetings, as well as a set of minutes subsequent to the meeting that the Action Alert reports on, so you're able to see what decisions the boards make. And Doug, thank you so much for your time in explaining that in as easy a way as we both probably could, given the complex nature of what we're encountering.
Thank you, Tom.
And that's another episode of Ravlic at Large that's been brought to you by YouTube, and I look forward to presenting some more of these in the very near future. In fact, much sooner than you think. Take care of each other, stay safe, and I'll be back with another episode of Ravlic at Large shortly. Hello and welcome to Ravlic at Large. My name's Tom Ravlic. Thank you for joining me for this particular episode, and thank you for those of you who provided some wonderful comments and looked at all the other episodes featuring the Assistant Minister Andrew Leigh, Senator Barbara Pocock, and Greg Barton from Deakin University. It's been fantastic to hear your feedback along the way. The federal government, somewhere in the middle of December, tells us things about our economy, kind of like a half-year report. They call it the mid-year economic and fiscal outlook. Now, my guest today is going to tell us more about some of what the MyEFO document tells us about the Australian economy as we go into 2025 and closer to a federal election. You may have heard something about some bad news about budget numbers, etc. And that doesn't mean that Jim Chalmers wants to be a Grinch. He's obligated to tell us what the state of the economy is. Now, Deloitte Access Economics Director and my head of Deloitte Access Economics, Pradeep Phillip, joins me to explain what this serious document is and how we can navigate it to better understand what our economy is like. Pradeep, thanks for joining me.
Good to be with you, Tom.
Now, I occasionally kick these discussions off with a basic question and a foundational question, because not everybody comes to a discussion understanding the documents that detail the state of the Australian economy. What, in the simplest possible terms, is the mid-year economic fiscal outlook?
Sure. Tom, maybe I can explain it this way. You have a budget in Australia that's typically at the federal government level delivered in around May. And sometimes it changes at the, just by a decision by the Treasurer and the Prime Minister as to exact the time. But let's focus on this. Once a year, there's a federal budget. And usually halfway through the year, there is an update on that budget. How are things looking? How are things going in terms of spending or revenue flowing into the Treasury coffers? Have the economic parameters for the year ahead started to shift? And so you get every year a budget and a mid-year update called the MyEFO, as you described. There's a third document that in this budget cycle appears every year, and that comes in around September, October, and that's the final budget outcome. This is a report that tells you for the last financial year, when all the books are finalised, what the outcome was. Now, 3 budget documents every year. And just before an election, there is a 4th document that appears called the PFO, the Pre-Election Fiscal and Economic Outlook. And that's a document, once a federal election is called, it's a document released by the Secretary of Treasury and the Secretary of Finance. And that tells the voting public the update on the state of the books and the economy at the time that the election is called. So 4 good budget documents. If people ever want to know how the budget's going, you go to one of these. If you want to expand your knowledge about how the world works, go have a look at the budget documents. And equally, if you want a good night's sleep, sometimes pick one of these things up.
So you're recommending them as a non-chemical cure for insomnia, are you?
Indeed.
If we
One of many uses. One of many uses.
If we go momentarily back to the document you mentioned that comes out in September, October, which is the actual budget. So this is where we get the 23, 24, for example, the actuals as opposed to the forecast or the budgeted numbers. So you can see the variances.
Correct.
How should people grapple with that in their thinking? Because not everybody works with numbers the same way.
Yeah. Look, and it's always a difficult task. There are the absolute numbers that you should think about, and then there's the change between a budget, a final budget outcome, or a mid-year economic and fiscal outlook that you look for. Because the change tells you a little bit about the stance of policy. The change tells you about whether some things are growing faster than we expected or slower than we expected or in line with our expectations. So it's really important to get a handle on the change between what was forecast at budget time and what is updated, for example, in the document that the Treasurer has released today. And then, of course, when, like every one of your viewers who has a business, they rule the accounts at the end of the year and they do all their final reconciliations, well, that's your final budget outcome. So it's important to look for the change, particularly since what was forecast at budget time in this particular document, the MyEFO.
In some respects, and if we can be imprecise here, and I know it's not the same thing, but one way of thinking about this is like a half-year report for a listed company, but it's not quite, is it?
It's not quite, because it also gives you updated forecasts, not only on decisions that are in the control of government, but it tells you what has been happening that are outside of the control of government. Yeah. So in the budget, you look for two things. What has shifted the numbers because there's been a deliberate policy decision that's been taken? So, for instance, since the last budget, the government has made decisions about spending more money on childcare. So you'll see that as a policy decision in the budget. Since the last budget, I think they've spent a bit more money on defence. Well, you'll see that here as a policy decision. But then there are things like, at the budget time, the government would have had a forecast of unemployment. The unemployment rate midway through this year, and therefore that would flow into the amount of unemployment benefits that are paid out. Now, what we have found is that unemployment has been lower than the government had expected. There are more people in jobs than the government expected. Now, that is what they call a parameter change. And so the consequence of that is actually, because there have been more people in jobs, there's more income tax flowing into the coffers of the Australian Treasury. And so you look for policy decisions since the last budget, and you look at parameter variations since the last budget.
That's a neat point in which to segue into this little document that has come out today. What are the things that it tells us about the way in which the economy is framed or is situated at the moment?
So let's start with what does these set of budget documents and budget numbers tell us about the economy? It tells us that government spending and migration have been propping up the Australian economy. It tells us that the private sector has been really flat. Right? And it's not surprising, given increase in interest rates, global uncertainty, that the private sector is in a lot of trouble. The third thing it tells you is that the slowdown in China is already affecting Australia. There's less money coming into the Australian coffers. There's less economic activity. The price we get for the things we trade with China in particular are coming down, so we're not getting the same income flowing into Australia from China. And the last thing it tells us is that investment in this economy is the Achilles heel of our economy. So this document tells us something about the state of our economy. What does it tell us about the budget? It tells us that this gravy train of the rest of the world giving Australia a paycheck has come to a standstill. So over the last 4 budgets, Tom, on average, about $80 to $90 billion of revenue surprises flowed into the Australian Treasury's coffers. Why? Mainly because commodity prices were higher. China was effectively giving us a big paycheck. And to give the government credit, they banked a heck of a lot of that. But that gravy train has stopped. The second thing that's happened is that spending has increased. And so when you put those two things together, you start to form a picture that the revenue base of Australia isn't quite up to matching the spending that's taking place by the Australian government. And that's why you've got a fiscally unsustainable position starting to develop. And so there are things then around the state of the economy and about the budget that give us an idea of, so what should we be doing next? What should people be looking out for? What should we expect from our politicians? And we're within only a few months of going to election, Tom. What do you want the Australian economy and the Australian government to be doing for you?
Now, I think it was your budget monitor that looked at some aspects of what might be coming up in MyEVA. And one of the remarks you clearly made in there, and it's been observed elsewhere too, especially with the release of MyEVA, is that budget surpluses are nice things, but we're not going to have one for a very long time. Can you explain
That's
why?
right. So again, you'd recall we had a string of budget deficits, particularly driven by the pandemic.
Yep.
Federal government, this government delivered 2 surpluses, by and large, because they banked revenue upsides that came from the rest of the world. And they resisted the temptation to just go and spend. So in that respect, they're a little bit unusual compared to governments we've seen in our recent past. They banked a lot of that. But then they've also spent a lot of money since then. Why? Because they came in with, in one part, an election mandate. 2, it's easy to say cut spending. It's a lot harder to do. 3rd, they've spent things in areas, for example, Tom, you recall there was a Royal Commission into aged care. And that Royal Commission said, spend money in X, Y, and Z. Improve the quality of life for people in aged care, have more nurses, pay them better, make sure they've got enough time with patients, not just doing admin, improve the quality of the food that goes into aged care. Guess what? That costs money. We've then had a change in the global landscape. Security concerns have risen significantly in the minds of people right around the world. That's necessitated, and you've seen this particularly with the AUKUS agreement, the shift towards needing to spend more money on defence and national security. Then there have been things like childcare and mental health and the NDIS that have sucked up more money. All the while, especially as you look out over the coming 4 years, the forward estimates, as it's known in budget language, you see revenue starting to come down, i.e. not grow as fast, and spending outpacing the growth in revenue. And so we see this string of deficits over the forward estimates. In this particular year that we're in, the Treasurer has forecast a deficit that was smaller than they expected. And why? Primarily because we've had lower unemployment and therefore more people in jobs and personal income tax increases flowing into the Treasury coffers. But going forward, you see expenditure growth faster than revenue growth. And so the deficits have gotten bigger.
There is a debate that's going on between the government and the opposition in relation to government spending contributing to the deficits. Let's pretend I'm a bear with little brain for the moment, which I think some viewers will find amusing, but let's just do that for the moment. How do you explain that to people? Because on the one hand, if we take procurement, for example, if a government procures services, it's only paying for the services it buys. But if it hires people, like if it beefs up the public service, you get not only the personnel in the building, but you also get the associated liabilities that come with that. Is that why we're seeing that focus on the debate about the spending on, say, increasing the public, beefing up the public service, and reducing the reliance on consulting? Because you're, for want of a better term, Pradeep, the liability part of the government's balance sheet becomes slightly more obese.
Yes. Look, Tom, essentially this is a debate about whether there is sufficient capability and capacity in the public service to deliver the things that they say Australians need. Now, we used to have a very strong ideological debate between big government and small government. The truth is that in Australia, indeed in most of the developed world, political parties have kind of found a common ground in that they all tend to be quite interventionist. And so this gap between big government, small government has kind of become blurred and almost disappeared. You see this in US politics, you see this in Australia, you see this pretty much around developed democratic nations. Now, in Australia, there has been an argument that there has been some denuding of the capability in the public sector. Indeed, the government's acknowledged that. They've had some reviews into it, and they have the Australian Public Service Commissioner try to rebuild capability and capacity. And there is a choice that then has to be made whether everything is done in-house, what do you outsource, what do you start to automate? Because technology is one of those really important things that can drive efficiency and effectiveness in government. But as we've also seen, Tom, and as you've reported on, you can also go horribly wrong. Because at the end of the day, you've got to understand government needs to keep the citizen and their needs at the center of what they do. And that's not always easy because it's hard to provide standardized public services to reduce your cost while providing a personalized service to the citizen. That's the challenge that governments make. And there are various ways they can think about it. But in the end, if we look at the years coming forward, Tom, it doesn't matter who's in government, they're going to face some serious spending pressures. One is because our population is aging, and that demographic change is going to have an impact on having a smaller proportion of the population who are going to work and pay tax, and a larger proportion of the population who are going to need services. That's one. But there are big spending pressures around defence and national security. We are entering into a world that is becoming more complex, more uncertain, and where national security is going to be a bigger and bigger feature. So that's one. Defence and national security pressures to spend are going to rise. The second is we have an energy transition that's underway, and both sides of politics now recognise the importance of it, but that's going to require more investment going forward. The third thing that's been topical in public political debate has been housing. There's going to be more pressure to spend money on housing. And finally, I go back to one of the economic things from this MAIFA is that investment is the Achilles heel of the economy. we've got to find new ways to incentivize investment and thus lift productivity going forward. So these spending pressures are going to loom large on whoever is in government. And the question is, how do you do this? And just always remember there are two sides to the ledger here, Tom. There's the spending side and there's the revenue side. And the reality is we need to embark on some reform on both sides. You got to think on the spending side, how do you pivot it much more towards incentivizing investment in the economy? That's one. The second is we have to do proper evaluations of what we're spending money on to make sure that it's effective and not wasteful. And on the other side of the ledger, we've got to the point where our revenue is not keeping up with expenditure, but more importantly, we have this over-reliance on personal income tax. And so we need economic reform around tax that starts to make a tax mix switch, i.e. switch the emphasis from personal income tax to broaden the base on other forms of income and wealth, and to think about what the new bases for economic activity will look like in the future that will require paying tax. So that's two sides of the ledger that you have to look at.
Interestingly, you mention in not so many words that great bogey of economic debate being tax reform. Both sides of politics, that is the major parties, seem to struggle when it comes to having a genuine discussion about sort of putting our tax regime in, to coin a popular reference, going through an exercise of renovation rescue, right? And that is doing what needs to be done to change it, to improve things going forward. Why are we timid?
It's a really good question, Tom, and I think it's a complex kind of answer to that. One is, as a general rule, politics has become much more focused on the short term because the rewards are there in the short term. Okay. It appears, apparently, that the attention span of the electorate is more short term. The news heard changes so quickly through different mediums that the short term seems to dominate. And so it's no wonder that the political apparatus switches its focus towards the soundbite, the less discussion, less explanation, more short-term benefit. I think that's one. The second is we've allowed the loudest voices to always get their way. And the loudest voices aren't necessarily the ones we have to most listen to. Often it's the quiet voices, those who don't have a voice, who need the most help. And so you get this inequality in political economy that starts to develop, all focused on the short term. So what do we need to do? We need to have a more considered debate. We need to have institutions that allow for that considered debate. We need to make sure that we are conducting that debate far more respectfully than occurs at the moment. It is okay to have different points of view, but make sure people are sitting at the table. It's the number one rule in any negotiation, Tom. You can't negotiate an outcome unless there's a table and people are sitting at it. And so these are some of the things. There's some institutional factors that we need to tend to allow a better debate. Second, we've got to lift our horizons just from the short term. And third, we've got to conduct ourselves in a much more respectful manner than I think politics has allowed for and our institutions have allowed for in recent times.
Jargon, and you've been really generous with your time, but what I'd like to do is wrap up with this one, because economics is laden with jargon. And one of the ones that fascinates me, and always fascinates me, is the whole concept of something being off budget. Because and I've had to get my head around this when I was a policy advisor many moons ago, looking at public sector accounting and private sector accounting, and sitting there thinking, oh, so the general government sector is a box with a bunch of things in it. And those things that are in the general government sector can invest in something that lives outside the general government sector. When in fact, if we think about it as a consolidated thing, it's all really it's the same entity, right? Is off budget transactions, to coin a phrase, really the government playing with itself?
Look, these are legal arrangements that take place, and there is a time and a place for this. The problem is too many governments have seen these as a loophole, as a way of being able to go to people and say, we've got all this activity, but kick the can down the road in terms of the financial accountability. And what we're seeing is successive governments have loved setting up off-budget special purpose vehicles. Now, quite often there is some legitimacy where that vehicle has some asset against which there are borrowings made, and things kind of look okay. But in the end, who foots the bill, Tom? It's taxpayers. And so
it doesn't quite, in a sense, what I was saying was right. It's at the end of the day, the owner,
yes,
ultimately is the community.
Absolutely. And look, you can set these special purpose vehicles up for a very good reason, because you can exert good management control over them in a way that is quite different to running a department. You can drive commerciality in a way that doesn't quite fit with a pure public service. But the budget transparency of this and the use of these vehicles has to be looked at, because what we've seen is that the gap between, say, the headline budget number and the underlying cash number is getting bigger and bigger. And it's all fine if these special purpose vehicles are governed well, they make a return, and at the end of the program, you close it off and there's no problem for the taxpayer. But the question is, if something goes wrong, the liability will then hit the books. And that's when taxpayers have to foot the bill. So increased transparency would be a great first step.
And how do you increase that? Well, what in basic terms, how do you illuminate that space?
So a couple of things. One is, let's start at the front end. Let's make it a lot harder to set up one of these off-budget vehicles in the first place. There's got to be a very, very good reason. The second is, in setting it up, let it not be hidden within hundreds of pages of budget documents as to what's expected, how it's going to work, what the rate of return is, what the risks are. Let's be upfront about that. And then the third thing is, make sure the reporting on how they're actually going is really clear in terms of the budget. I think it's really important, given that at the end of the day, the budget numbers around cash and headline flow into what you have to fund. And so it's important from a funding perspective and therefore a tax perspective that we have clarity on this.
Pradeep, that's been a really neat deep dive, almost half an hour on what is a very, very complicated area, very complicated terrain. Thank you so much for walking us through this.
Thanks very much, Tom. Take care.
And thank you for joining me for this episode of Ravlic at Large. I will be back soon with another episode shortly. But in the meantime, stay safe, take care of each other, and I'll be back soon. Hello and welcome to Ravlic at Large. My name's Tom Ravlic. Thank you for joining me for this particular episode of the Stream program. Thank you for all of those viewers and listeners who provided some feedback to the other chats. It's been fantastic. Keep the feedback coming through. I find that useful, and also welcome any recommendations for future interviewees as we go into 2025. My guest today has an extensive CB in dealing with matters related to foreign affairs. Geoff Raby is a former Australian diplomat. He was stationed in China for a significant amount of time, and he has written rather recently a book called Great Game On, which examines the kinds of relationships that people are looking at in terms of the great powers and whether they are ganging up on the West or whether the West is misunderstanding what is going on. And that's actually a topic worth contemplating, because sometimes we need to take a step back and look at not simply what we think might be happening based on our own prejudices, but also what might actually be going on. Once we understand that, we can plan and think about things more strategically. Geoff, thanks for joining me for this particular discussion.
My pleasure, Tom. Thanks for having me on.
Now, look, your book has a subtitle which opens the topic for us. It talks about, refers to the contest for Central Asia and global supremacy. Can we start there? Can you unpack the subtitle for us?
Yeah, certainly, Tom. In many ways, this follows on from my previous book published in 2020, China's Grand Strategy and Australia's Future in the New World Order. That book was framed by what I described as the great power shift of our time, and that was a power shift across the Pacific from the United States to China. And we've seen over the last 30 years with China's inexorable economic growth, similar expansion of China's military and political weight in the East Asian region and the Asia Pacific more generally. And this book very much is a sequel to that, insofar as it looks at what I describe as the second great power shift of our time, and that is across the Eurasian continent from Russia to China. And I should perhaps just define the area we're talking about. The book defines Eurasia as that vast stretch of territory from the Vistula River in Poland east to the Sea of Japan. Within that are two sub-areas that are of great relevance. One is what we know as Central Asia. They're the five stands: Turkmenistan, Tajikistan, Uzbekistan, Kazakhstan, Kyrgyzstan. And there is another concept which is core Eurasia, and that very much is the focus of the book. And to the five Central Asian stands, we add Afghanistan and Mongolia, and that really is the central area, I think, of the contest between China and Russia.
One of the interesting issues that comes up between, in the midst of all this, is of course the contest between those two. But if I look at some of the commentary about things that are going on in the Ukraine and elsewhere, you've got people who are looking at China and Russia and seeing them as convenient bedfellows. How do you, as a former diplomat, view that particular relationship? Is there something to what people are saying, or are they misreading the play?
Yes. So that goes, I think, into many ways the core of the whole book. and that is the question of what is the future stability of the relationship between Russia and China, and is this a solid alliance against the West, or is it more, as I describe it, a concert of convenience? And why I argue that it's more of a concert of convenience is that in key geostrategic areas and geopolitical areas, their interests diverge rather than converge. I say that there's more that divides them than unites them. So there's a very long history of conflict and disputation. That arises partly from their fundamental difference in how they achieve their security. Russia, as you see with Ukraine, believes it needs to occupy neighboring territories, have buffer zones in order to protect its core areas. China, on the other hand, looks to have client states or tributary states, states that are free to basically operate. They're not colonies, free to operate in their own way, but are required by China to recognize the legitimacy and authority of Beijing and the powers in Beijing. Historically, the tributary idea is fascinating when you dig into it, because when the emissaries from places like Vietnam, for example, the neighboring countries, Korea, whatever, would come to the court in Beijing and present gifts to the emperor, they often went home with gifts of far greater value than that which they took to the court. The point being, for the emperor, who didn't need anything, it would be a humiliation if it looked as if he was wanting to transfer resources from a lesser state, was the act of recognizing the emperor's supreme authority. And that was important for the emperor to maintain his authority within China rather than over the neighboring states. So two very fundamental differences, approaches to how they achieve security, which inevitably brings them into conflict. What's happened, if you look at it historically, is that this vast area that we're talking about had previously been under Qing control, and then that was settled by a treaty called the Treaty of Ajun in 1689. And that represented a period that lasted for 200 years where the Qing were relatively more powerful than the Russians. But come the mid-19th century, when the European powers are nibbling away at the coastal territories of China and occupying territory up and down China's coast, and the Qing court was on the verge of collapse, it was very, very weak and internal looking, the Russians demanded two treaties from the Qing. One, the Treaty of Tianjin, 1858, another, the Convention of Peking, 1860. And with those two treaties, vast areas of territory, over 1 million square kilometers of territory, went to Russia. And today, not 1 kilometer of that has been returned. And just to help your listeners put this in perspective, that territory is equivalent to 1/7 of the entire continent of Australia, which is still held by Russia. And Russia was able to do that because power shifted between the two. And it's important to understand that what we're living through now is another power shift, but this time back towards China. And that's why I think ultimately the long-term relationship between the two is inherently unstable.
It's actually, it gives us reason to pause to reflect on the approach that is being taken by, say, Russia to the Ukraine, for example, where it wants what it sees as historical territory. And on the other hand, you've just articulated in a very, very pithily in a short burst, the history of, the tension between Russia and China in terms of, basically land grab by agreement. If I'm putting that correctly.
Well, not quite agreement. These 19th century treaties, the Chinese have always referred to as unequal treaties. because they're made in the context of unequal power balance. And of the Europeans, which have always been attacked and criticised by China, particularly under the Communist Party, for the unequal treaties, all of the Europeans have returned the territory. Only Russia has never returned any territory acquired under these unequal treaties. So it comes back always to this question of the balance of power. And that's why I take a different view on the outlook of the China-Russia relationship than, say, many contemporary commentators. They see things like in February 22, Putin goes to Beijing just before the Winter Olympics, and a statement comes out describing the relationship as a friendship without limits. And immediately everyone in the West rushed off and said they're ganging up on us, and this is an alliance of autocrats, an axis of authoritarian states, you name it. But what's interesting is ever since that statement was made, you've never heard it again in Chinese media, in Chinese propaganda, because it denies the difference in interests that underlies that relationship. What they do share, absolutely, is a sour, even bitter attitude towards the West, and particularly the US. They're not bound together by common interests, by common security, by ideology. They're bound only by a dislike of the US-led West. And the other important point here that needs to be borne in mind is Russia and China are integrated into the international system in vastly different ways. Russia is not much more than a hydrocarbon exporter, oil and gas. China, however, is, as we all know, through complicated supply chains, it is utterly dependent on world markets for all its energy and resources it needs to keep the economy going. Its financial system, everything is much, much more deeply integrated into the West and actually more exposed to Western pressure. Russia is very, very different. So a sour attitude towards the West can change overnight, if you like.
It strikes me there's another question that's worth exploring here, given the fact that you've raised some of the problems you've got with contemporary commentators on the China-Russia relationship. How do we get a more sophisticated understanding out there in the community about how these countries operate? Is the actual consequence of the commentary, or rather, is the commentary that we're seeing the product of the political machinations here rather than the clear thinking on the part of analysts?
Oh, I think very much the former, Tom. I mean, look, one of my motivations for writing the book, I have to say, it turned out to be harder than I had imagined, because the whole history and the geopolitics are so complicated. And I've tried really hard to simplify it for people, because I believe it's such an important part of the world and bears so directly on global stability that it really does need to be understood better than what it is in commentary that we see through the papers or think tanks. Look, there's another element to this. I mean, we hear heads of our intelligence agencies, be it here or in London or Washington, talking about the alliance of disruptors, China, North Korea, Iran, Russia, never looking at what divides them, what their different interests are, never looking really at how effective they would be in operating together, and asserting and basically assuming that this is a given. And I'm disturbed at how many journalists just repeat these lines as a given. Frankly, many of the people in the intelligence agencies or the military have a vested interest in beating up this threat. It's just like the China threat. And if I go back to my book, the second chapter you may have read on the Great Game in the 19th century, where Imperial Russia under the Tsars was said by British analysts, the media, popular journalists, politicians to have an intent to take India from Britain, to take over British India, where there never was in the court of St. Petersburg any idea, and anyone who's travelled, any idea to do so, and anyone who's travelled, as I have, around the vertiginous mountain passes of the high Himalaya will know how fanciful that is. And even Lord Salisbury in the 1880s, who was what they called a forwarder, someone who was beating the Russia threat drum and saying Britain had to be more present and engaged in Central Asia to block Russia. He even once in Parliament had to say, if the honourable gentleman looked at the map and used a ruler rather than inches, they wouldn't be so worried. I mean, geography prevails in many ways. So, I mean, you get my point. And so it's easy for people who have interests, whether it's to get budgetary allocation, whether it's to build military strength, easy for these people to talk up these threats. And there's very little critical analysis that tries to pull the assertions apart and really try and understand them in the geopolitical, historical, and economic context, as I've tried to do in this book.
You make a point in the answer that there's little critical analysis. Is that because you've got journalists in the press gallery in Canberra and elsewhere who are captive to their sources, shall we say, that sit in a particular part of either the intelligence and security establishment or within government more generally, who are wanting to seed a narrative out there about China or Russia that suits a political motivation rather than serve the audience that journalists and commentators ought to be serving, to provide them with a clearer view of why things are the way they are.
Oh, I couldn't agree more. That's a big part of the issue, and the bubble's not just in Canberra and between certain media in Canberra and or representatives, certain media and the bureaucratic interests, but it's also between our bureaucratic and security military interests and the United States bureaucratic, strategic and military security and military interests. Look, given how much it's at stake with the military-industrial complex, how much money is being spent against these threats or to protect us against these threats, we really do need to have clinical, dispassionate analysis of every statement, of every argument. But what do we get? Was it earlier this year, I think, the front page of the Sydney Morning Herald with red arrows coming from China, showing China attacking Australia. And it was based on a seminar that involved 3 analysts from ASPI, who have always been known as China hawks. There wasn't a dissenting contrary view permitted in that discussion. And the Sydney Morning Herald ran it for 3 days. That is not critical, clinical, calm, dispassionate analysis. And what we're talking about is billions of dollars and the potential of war and massive loss of life. We owe it to ourselves to tease all of these threads out and have a proper public discussion about them.
Having made that observation, how do we have a proper public discussion about them?
Well, you're contributing now. I've contributed with my books, and I write the occasional column these days still for the Australian Financial Review. We have a lot of organs. I've done, for promoting this book, I've done a lot of podcasts. I've spoken in many forums, and I've got a full program in the first quarter of next year to do so as well. There is the opportunity, but clearly it's not a level playing field whatsoever. But the good thing is we do live in a democracy where we can say these things. It's not like China or Russia, where contrarian, dissenting views can be heard in public. So we're in a pretty good shape. I think one of the things I've always said in the context of the China threat, particularly Chinese interference in the domestic politics in Australia, is that our domestic institutions are very strong. The parliament's very strong. The media is very strong. Even if you disagree or don't like some of the bias that's in the media, it's still very strong. And ultimately, it's open to challenge as well. And in many ways, it's more challengeable now because although we have incredible media concentration in Australia, almost to an undemocratic extent, we have these podcasts, we have new media to have this sort of discussion in, and more people are going to these sources.
One of the things I would like to explore before we conclude, and you've been very generous with your time, there are a range of issues that need to be managed in any context, whether it be China, whether it be Russia, whether it be looking at both. How does somebody in the line of work that you used to be, and that is being a diplomat and an ambassador, balance all of this and reflect on all of that, and to give it context to people sitting in Canberra who are no doubt besieged by journalists, besieged by their own political colleagues and their opponents on a raft of issues? How do you manage that to try and keep it level-headed and cool-headed in terms of the analysis that's provided to people so they make sensible decisions?
When you're asking that, Tom, I'm smiling and I'm thinking of a famous quote from Sir Harold Macmillan, the former British Foreign Secretary, when asked a similar question. He said to the interviewer, "Events, my dear boy, events." And that is the reality of foreign policy. Stuff happens all the time, events. And, what I think is important in this context is that the advisors are deeply committed to having a very strong grasp of history, of geography, of economics, that they have the intellectual framework. So when the events happen, they're able to quickly place them in a context. And one of the key things as a senior civil servant, senior ambassador, policy advisor to government was always to be able to help ministers understand where this comes from, what it means, and what we might do about it. And for that, you need really a lot of context and background. I have to say, some of the foreign ministers I worked closely with over the best part of a 30-year career that I thought did the job extremely well were those who are most interested in reading history, political biography, and who'd love to debate these sorts of issues. So they were alive and they're on their minds all the time. So when the events happen, they had context.
Is that one of the reasons why some of the commentariat is weak? Because there may not always be a depth of understanding of the subject matter. When they come to deal with a particular event that happens in a particular circumstance, there's a political environment that is volatile, that is brittle, and an event blows up. Is there something to be said for even news organisations ensuring they have people with a greater depth of training or greater depth of study looking at this?
Oh, absolutely. On that, I could not agree more. And I think some of the better media around the world, New York Times, for example, Financial Times in particular, always have a core of op-ed writers who have great depth and knowledge of the subjects that they're writing about. I think the Financial Review in Australia has done this very well with the appointment of James Curran as the international editor. His pieces are of a quality and a standard above almost anything else that's written on foreign policy in Australia, because he's been a professional analyst, historian, professor at university, and so he has the context, he has the background to be able to comment authoritatively instead of just making wild assertions, which so much of the media does.
Where, given the circumstances in the world today, that's a broad sweeping statement because there's plenty of them, but how do you see things right now, given all that's going on that we observe daily, whether it be on the news, whether it be in the print papers or even online? What are the things that concern you most about the contemporary world?
Well, again, my emphasis on context, I guess. What we're seeing is something I talked about in my last book 4 years ago. This is the new multipolar world order. The old order of dominant single power of the United States, it's gone, it's finished. 4 years ago, when I wrote those words that it was already over, it seemed risque, it seemed out there. Now, most people accept that we live in a multipolar world, and this is the reality of a multipolar world. And what can demonstrate that more? The US's capacity to influence the Western Front in the Ukraine conflict in Europe is constrained. It's had minimal impact, it would seem, in Israel, Palestine, the Middle East. Syria implodes without either of the big powers being involved, but we discover that a key actor in all of this is Turkey. This is what a multipolar order looks like, and it is chaotic. What we need to do is think about how we bring order into such an international order. And that's, again, where I would draw a big contrast between Russia, which is a revisionist power intent on smashing any notion of order, compared with China, which is systematically building its own order around itself. And I see a world in which we have two bounded orders, one around the United States, aligned through values and common political systems and so on, and one around China for the same sorts of reasons. And if nothing doesn't demonstrate that to me more, was the BRICS summit in Kazan last month, where 23 heads of state turned up at Putin's invitation, even though Putin is so heavily sanctioned by the West. And another 40 states have indicated they would like to join the BRICS. This is a China construct. It's China created, China led, China funded, but it's a multipolar world. And so you have Indonesia, Malaysia, Thailand, all wanting to become members of the BRICS, but finding no contradiction in that with being long-standing members of ASEAN. This is the complexity of the world we live in. We just have to get to understand that. And the simplicities and the certainties and the predictability of the old order have gone. And the last section of my last book, I called Australia's dystopian future, trying to explain that this is the sort of world Australia is going to have to learn to live in, one that doesn't have the same comfort levels and certainties of the old US-led order for Australia.
One way of summarising that is that in the past, people seem to have a simplistic narrative. The story becomes more complicated, and you've got to try and explain that in a different way. It's not simply a story of goodies and baddies anymore, is it?
Very well said, Tom. Exactly. We're not in a goodies and baddies, black and white world. It's all shades of grey. It's very complex.
Yeah. Geoff, thank you so much for your time. I really do appreciate the insight and the background you bring to this discussion. I hope you two are across the first quarter of 2025 goes well.
Okay, thank you very much, Tom. All the best for the festive season to you as well.
Thank you. I've been talking to Geoff Raby, former Australian ambassador to China and also a long-standing public servant. about the challenges in the big wide world, and also whether we actually understand China and Russia and how they cooperate or not cooperate with each other, as the case may be. Thank you for watching, and there'll be another episode of Ravlic at Large reasonably soon. Stick around.